So we have another virtual participant, and each year Quontic Bank has been a sponsor of this conference, and Frank Melia is with us by Zoom. And Frank is someone who is very, very instrumental in the mortgage industry, not just on the high-end side, but also dealing with reverse mortgages, senior clients, things like that. So we've used him in our practice. And I want to thank Quontic for being such a generous sponsor and turn it over to Frank.
Thank you, Lou. Good morning, everybody. I'd first like to just start by saying Happy Veterans Day. If we do have any veterans in the house, I appreciate your service, and I hope everyone has a great day. If anyone today at the Intergen has ever had a case or has ever helped serve a family where there were unconventional ways that their real estate were owned, typically an irrevocable trust or a revocable trust or a life estate or maybe an LLC, we are the division at this bank that handles those types of cases, and we do it on a daily basis. So we have a lot of experience in this field. Quontic Bank is a federal chartered bank. We're based in New York City. Out at the Long Island location, but we serve the entire state, and we actually serve the entire country. Being a federal chartered bank, we're licensed in all 50 states. We also are one of a few banks or a small group of banks that have a CDFI designation. It's a community development financial institution. Banks receive this designation from the federal government when they show year over year that they serve and they provide financing for the underserved communities. Lou mentioned reverse mortgages. The reverse mortgage is the program that we get the most questions about, because there's so many misconceptions about how that program works. But basically, people that go for those programs or the reverse mortgage program are seniors or aging retirees, all around the country that have limited income or fixed income. So by helping a lot of those families, as well as the underserved immigrant communities, we've received the CDFI designation. When a family or an attorney or an advisor or an accountant reaches out to us, the common thread is usually that there's liquidity needed. There may be insurance planning that's being done, similar to today's case study. There may be certain insurance planning strategies that are going to be implemented. Certain properties or certain parts of the real estate portfolio may be put into certain types of trusts. There's really no irrevocable trust that our bank cannot figure out any specific program that we offer. If there's any language in the trust that we're concerned about, we'll reach out directly to the attorney and discuss that. But at this point, we've been doing this now for 10 years. Our division is the division that handles the trust lending programs here at Quontic Bank. We can offer 30-year fixed rate mortgages, 15-year fixed rate mortgages. We have some adjustable rate mortgages as well. And we also have lines of credit that can be offered. So typically we just sit down with the family, obviously over the phone or on a Zoom call or face-to-face, and we gather all the information, we review the trust, and we come up with a nice spreadsheet for the family with all the different options so they get a good idea of what's available and what they can do to tap into the real estate. We can only lend to real property in these trusts, so we can't lend to any other types of assets. We need the collateral to be real estate. We prefer residential, 1 to 4 family units, condos, as well as co-ops in New York City. One of our newer programs, which we're very excited about, which we just came out with over the past few months, is an asset utilization program. The way this program works is we can lend, obviously, we can have irrevocable trust ownership or revocable trust ownership of the real estate. And sometimes families that are looking for liquidity may not have the income, may not have the adjusted gross income on their 1040, or may not have a job. These may be high net worth, older individuals that have a lot of assets. So what we've come up with is an asset utilization program where we'll look at the liquid investments. We can't use real estate, but we can use money markets, CDs, stocks, bonds, mutual funds, any type of investment that the family may have. And we get very creative with these loans. We can look at asset bases for the grantor settlers. We can look at the trustees. We can even look at the beneficiaries or the spouses and the family of the beneficiaries. So we'll get very creative with the family and see who wants to be a loan guarantor. We do need a loan guarantor if the family chooses any of the asset utilization programs, or the 30-year or the 15-year. If the family wants to, and feels that the reverse mortgage program, the line of credit, is the best program for them, that's a non-recourse loan, and we don't need a loan guarantor for that type of loan. So there are many different scenarios that we come across, from people that have high or very large whole life insurance policies. We had a case recently where the policies were in jeopardy of lapsing. So we were able to look at the real estate portfolio of this family, and we were able to use some asset utilization loans to tap into equity in some of the real estate, which provided the family the liquid funds to keep those life insurance policies intact. There's many different reasons why people look to tap into real estate when they do this type of planning. But we find it's usually for maybe a spouse needs home health care, or there's some home improvements that are needed for a spouse or a family member. But there's no restrictions on what anyone can do with any loan proceeds. Keep in mind, any of these loans that we offer to trusts, all loan proceeds will be released into the trust. They're never given to grantor settlers directly. We understand how the trusts work, and we do keep the integrity of the trust intact. We do not try to change anything. And if there's anything that needs to be discussed, we'll reach out directly to the attorneys that are working with the family. Keep in mind, on a final note, that our division, which is the Melia and Bocelli team, is the only division at Quontic Bank that offers these programs. So if you want to just give our name to a family, or if you want to reach out to us, don't just call Quontic Bank. All of my information is on the slide today and in the handouts, but you have to just reach out to Frank Melia, the Melia Bocelli team, and our entire team here looks at trusts on a daily basis. We're here to give as many options as possible, and hopefully we can help you solve a problem that the families you serve might be facing, where traditional banks, credit unions, traditionally have not been offering these types of loan programs. With that in mind, I really just want to offer everyone a safe holiday season. We live in interesting times, and I hope everyone has a great day, and I hope everyone enjoys the rest of today's event. Thank you very much.
Thank you, Frank. Round of applause for Frank and Quontic Bank, and again, all of our sponsors who generously contribute towards the cost of today's program to make it available to everyone. I have it happen to me once a month, probably, where a client comes in and says, "Oh, you did this trust for us, and you put our real estate into the trust, and now we want to get a mortgage, and the bank says we have to take the real estate out of the trust, they'll put a mortgage on it, then we can transfer the real estate back in." Well, if you've done it for tax purposes or Medicaid planning purposes, you can't reverse the transaction. You undo all of the planning. And so traditional banks won't lend into those trusts, irrevocable trusts, but Quontic will. And it really comes in, it's a specialty product, and it really comes in handy for clients who need to get liquidity inside of a trust for lending purposes.